This is Daniela Camboni for Kitco News, still at the IPMI in Las Vegas, and we have a special treat for you today. We have CPM Group with us here. To my left, Jeffrey Christian, the founder of CPM. We have Rohit-savant, Mu Lee, and Erica-rannestad, all analysts with the firm. Thanks everyone for being here. So Jeff, are they working hard, or are they playing in the sun over here in Vegas?
At least I'm working hard. No, I think we're all putting in a fair bit of time.
All right, so we're going to be getting everyone's outlook. We have four metals, four analysts, so on gold, silver, platinum, and palladium. Before we begin, though, Jeff, which one right now out of the four metals do you think is the hottest?
I actually am probably most interested in palladium. Obviously, gold always garners the most attention. Silver's kind of at an interesting point, and platinum, I think, is in line with palladium.
Right. Okay, so let's start with silver. Obviously, lots of volatility in that market. Mu, what kind of outlook are you expecting for silver in 2012?
Right now, we are probably the most bearish on silver compared to all the other precious metals. We expect prices to soften during the summer to average about 27.80 for the silver prices, and we expect prices to pick up during the fourth quarter, averaging around 29.10 or so. And right now, investors are very bearish on silver. They have been building short positions in this market, and that slower investment demand is likely to weigh on prices.
Okay, so Mu, let me ask you, I spoke to other analysts who were quite bullish on silver, predicting up to $40 silver this year. So how come we see such discrepancies sometimes?
I think it has to do with different perspectives in terms of silver investment demand, and our view is pretty much based on our macroeconomic expectations, because silver is still mostly industrial metal. Its industrial demand has been very strong over the past couple of years, but we do not necessarily see a surge in demand at these very elevated price levels. We expect fabrication demand to maintain at those levels, but not necessarily, pushing prices higher at current levels.
So Mu, let me ask you, if the world economy contracts, what happens to the price of silver?
If we look back to what happened to the silver crisis during the financial crisis of 2008-2009, prices dipped very sharply, and that may be the case if we do see the economy worsen so much. But that isn't our current view for the economy is still a modeling through scenario, and so we do not expect silver prices to dip as sharply as 2008, 2009, of course, but we still expect prices to soften.
Okay, good. Let's move on over to palladium now, what Jeff calls the hot metal, and we've been getting a lot of emails actually at Kitco regarding this metal. What are you seeing for the metal in 2012, Rohit?
A medium-term outlook for palladium is actually the most positive of all the precious metals. We base that outlook on expectations of strong fabrication demand for the metal. You also have supply-side issues.
Right.
It's largely produced as a byproduct, and South Africa is currently the second largest producer of the metal. You have a lot of issues in terms of safety stoppages and electricity issues, all of which can be disruptive to supply. So you have the supply side support, you have healthy fabrication demand. Palladium prices right now are getting hit a little bit by weakness in investment demand. And I think one of the factors that might be weighing on investment demand is all this metal that already exists, above ground metal that already exists. It's unclear where exactly all that metal is, but it's estimated at about 14 million ounces, which is a substantial amount of metal. So we think that that's something that would weigh on prices.
Right.
But when you look at it on an annual basis, the market looks like it's tightening. The fabrication demand numbers are definitely strong. You've got good auto sales expectations going forward. You've got tightening emission standards. You've got uses in electronics, again a sector which is expected to continue growing going forward. So fabrication demand strong, and supplies.
But let's talk about the supply issue a second, Rohit, because when we do speak about palladium, a lot of people I speak to say there's a shortage of palladium. So is that not the case?
Yeah. Now, see what might be confusing is on an annual basis, even we expect that there would be a deficit in the market, and that's basically just comparing the fabrication demand for X year with the supply, the fresh, the newly refined supply for that particular year. So if you do that calculation, going forward, we also expect that the market would run into a deficit. When I was talking about there being a lot of metal, it's basically the metal that's been mined over the years, which exists in some form or shape, which is what we think might be weighing a little bit on the prices.
So Rohit, let me ask you, why do you think investors are really liking palladium these days? And if so, what form are they buying it in?
You're seeing them buy palladium in, right now, you're not really seeing investment demand. It's actually falling off a little bit. But most of the buying is being done in ETF form. You're seeing some demand from bars and coins, but it's mostly being seen in ETFs. And why they're doing it is because there's this expectation that the supply and fabrication demand is sort of tight. So.
Good. Sticking to the PGMs now, platinum. Erica, what's the forecast?
Well, platinum is very similar to palladium, so our views in terms of our price projections are largely the same trend. So, but deviating from palladium is that platinum is a little bit more of an investment product, or regarded as a safe haven similar to gold and silver, and so it is suffering more so from weak investment demand than palladium. It's also suffering from different pockets of weakness in fabrication demand. So investors are looking at that and not seeing it as an attractive buy for capital appreciation prospects. So we do expect prices to improve in the latter half of the year and to continue to improve in 2013, but at a slower rate than palladium.
Okay. What's used more in catalytic converters, platinum or palladium, Erica?
Right now, palladium, because it's really dominated it's used more extensively in the gasoline markets, which the largest users of the largest gasoline markets are the largest auto markets in the world, so it's China and the U.S. Platinum is used more extensively in the European market, and the European market economy has been in recession since last quarter of last year, and auto sales have been on the down since October of last year, and so we've been seeing that as a big pocket of weakness in fabrication demand, and that's what investors are kind of focusing in on.
So to recap, price forecast for platinum for the year?
For this year, we expect it to be about $1,530. It's about a 10% decline from last year, and in 2013, we expect about a 6% increase, so to $1,620.
Okay. So finally, gold, our favorite. Jeffrey, what are your thoughts on this metal for this year?
Well, we think that gold could rise as high as 1,700 at some point on a spike, but that the overall trend is down. Okay. I mean, it has been in a downward trend for about 10 months now, since last September, and our expectation is that that downward trend is the predominant trend in the market. We wouldn't be surprised to see the price move down as low as $1,500 or maybe even $1,480 over the second half of this year.
Okay. So Greek elections this weekend, all eyes will be on that. What impact might that have on the metal?
It's a real tough call because our expectation is that the Greek election results, regardless of what they are, may prove to be negative for investor sentiments on gold. There are people who are viewing the Greek elections as being positive because the socialists will come in and they are hostile to the euro. But actually, even the socialist candidate, who's probably the front runner at this point, has said he doesn't want Greece to leave the euro. What he wants to do is renegotiate the austerity agreement. And 90% of the Greek population is in favor of staying in the euro. So if he, regardless of whether or not he wins, I think there may be a reevaluation of what the Greek financial problems are and what the likely outcomes are, and people may back away from a view that Greece is imminently going to leave the euro and move more toward a view that the European members of the ECB will continue to struggle with this problem, as they have been for 5 years now, and that it's not necessarily a matter of a crisis and a catharsis, it's a matter of an ongoing problem.
So Jeff, others I've spoken to have said that gold is acting again as a safe haven. How come it tends to move in and out of that category?
Well, I actually don't think it does move in and out of that category. I think that the commentators move in and out of their definition of it. I think gold tends to act as a safe haven, but what you see is with gold's price, it's a barometer of what investors are thinking. So there are times when they're more concerned that the euro, there could be problems with the euro, or there could be problems in the U.S. banking system, or the U.S. could, turn against Pakistan and stuff like that, and investors will buy gold and the price will rise. And then there are other times when investors reevaluate those views and say, wait a second, Europe has financial crisis, and it's not a catastrophe that's about to happen, it's an ongoing problem, and so they back away from it. And additionally, as Rohit and others have written extensively over the last year, we really think, and you're seeing it in the numbers, and I'm sure Kitco's volumes are showing it, that investors have backed away from this unbridled fear that I have to buy gold today regardless of the price. They're being much more price sensitive.
Okay. Let's talk quantitative easing now, Jeffrey. Do you think we'll see QE3 anytime soon?
I think that you may see QE3. If there's a financial need for QE3, you will see it because the Fed has said it will do whatever it has to do to try to stanch the bleeding. So if the U.S. moves into a recession, you will see quantitative easing because they don't want that recession to grow too large. But I would defer the bulk of the answer to Rohit because he's recently written a lot about and done a very good analysis of the relationship between monetary accommodation in general and gold prices.
Okay, so Rohit, what are your thoughts on that?
So when we ran the numbers on this, what we realized is that the impact on gold prices, there has been a positive impact on gold prices every time the Fed has exercised monetary accommodation or easing. But what we are seeing is that with every consecutive round of easing, the impact on the gold price is actually reducing or declining. So like Jeff mentioned, if the need does arise for another round of monetary easing, the Fed will go ahead and do that. But we doubt that gold prices are going to shoot up to that $1,800 or $2,000 mark that a lot of people are talking about. We just think that the positive impact won't be that strong. One of the main reasons why people jump into buying gold whenever there's this whole quantitative easing talk is because they're concerned about the loss in the value of the US dollar and in concerns about future inflation. Now, when we look at the US dollar, we actually had this chart for the trade-weighted US dollar. And since the Fed started its current round of monetary easing since around September 2007, which is when it started doing it started reducing its target rates, and then it introduced QE1 and then QE2. Since that time, the dollar has actually held up pretty well. It hasn't declined as much, or the way people make it sound like the dollar is going down the drain. There's no, it's becoming a worthless currency or whatever. It's not really losing value. It's actually strengthened in certain times. Unfortunately, I don't have the chart on me right now. But if you look at that chart, it's held up pretty well. So the dollar is holding up well, right. And then you have inflation, which really is under control right now. And in the future, if you do see inflation rise, we would think that would be accompanied by economic growth. So that gives the Fed enough room to sort of sell these bonds and sop up all that extra liquidity. So both those reasons why people jump into gold when there's this, like these announcements of QE, we don't really think hold, and we don't think that they're going to have that sharp positive impact on gold prices.
Okay. So when we're looking at all these factors, right, QE3, US dollar, Europe, which one do you think is weighing most on the price of gold right now, Jeff?
It's probably the European financial instability and how the European central bank and governments will deal with that. That's probably the single most important factor.
Okay, good. On that note, I'd like to thank everyone for being with me today. I think everyone's going to appreciate everyone's outlook. Jeff, I'm going to give you the final word. What would you like to say to investors watching?
I think that you should continue to expect to have gold and silver in your portfolio as a portfolio diversifier and as a safe haven. And you should also be thinking about platinum and palladium, and I might even say some rhodium, because those are metals that have very strong fundamentals on a intermediate term and a long-term view, and the prices are relatively depressed right now.
So you think rhodium could pick up once again?
Yes.
Okay. In what time frame?
Well, unfortunately, our analysts suggest that the price could stay weak for the remainder of this year, but I'm looking at it on a time horizon of 1 to 5 years.
All right, good. Well, thanks, everyone, and thank you for watching this edition of Kitco News. You can email me at newsfeedback@kitco.com. For Kitco News, I'm Daniela Camboni reporting from Las Vegas.